Hello everyone, today is Friday, September 18th, 2020. My name is Evan. Welcome back to our weekly stock market analysis video. If you're new to these videos, welcome. It is great to have you here. We break them up into two parts. In part one, we're going to review everything that went on this week in markets, and there's a lot to cover, lots of interesting things happening right now. We're going to look at performance sectors, internals, volatility, point of power, everything that stands out and looks interesting. In part two, we're going to jump into the charts, put everything from part one into context, look at some trends, and just try and make sense of the market action and position ourselves in the best light for the week ahead. So hopefully that sounds good to you. Let's dive into some of the takeaways, the headlines, the happenings from this week. It was quadruple witching here on Friday, which basically, in a real technical definition, lots of option contracts expired today. Lots of option contracts across different durations. It always leads to high volume market days, and we had that here on Friday. FANG continues to sell off, so mega cap tech is what's dragging everything down. We're going to talk a lot about that in this video, and we're also going to talk about Biotech, which saw a nice surge this week. It started with some M&A activity from last weekend, carried through the week, finished strong, and we're going to talk about some of the developments there. So if we get into the numbers now, we look at the equity market performance. Right-hand column is the performance on the week. You can see the Dow Jones nearly positive, basically closed flat on the week. S&P down 0.64%, so not horrible, but still negative. And the Nasdaq, which has been the laggard, continues to be the laggard, down 1.36%. Take a look at the Russell. This is small cap stocks here. Russell 2000 up 2.60%. That's interesting. And for the second week in a row, we're seeing some outperformance here on a relative basis out of world stocks. So these are ACWX, the ETF here, basically looks at world equity markets minus the United States. That was positive on the month, and showing some relative strength. If we look at market internals this week, it was actually encouraging, right? So I think from headline numbers that you may see this week, or you're looking at, again, these market cap weighted indices, you're going to see negative performance. When we look under the hood, and this is why it's important to monitor market internals, it was actually a constructive week. We saw 280 stocks net make 52-week highs. Keep in mind, Friday's numbers here are unsettled numbers, so those are basically estimates at the time of recording this. But needless to say, it was an encouraging week for the number of stocks hitting 52-week highs continued to move up, even though those indices basically were red across the board. If we take a look here at the 52-week highs minus 52-week lows, this is the past 30 days, and we basically just sum up the past 30 days. So you just keep accumulating the prior day's data, and we talked about this last week where we had this flat period in here, and we were concerned that this flat period was going to start to turn into a top that would start decelerating, that would start coming back down, and we'd start seeing effectively more new lows starting to get made. That hasn't happened. That didn't happen. In fact, we saw a continuation to the upside here, and basically a continuation of this trend of more stocks hitting 52-week highs. This is a net constructive for this market, and it's something I think is pretty important here that we want to continue to pay attention and monitor. Obviously, this can change on a dime, and the entire market, including the Russell small cap stocks and everything else, can start selling off more aggressively. But until and if that happens, the trend here is up, and this is a bullish current for the market. If we look at sector performance this week, we had 5 sectors in the green, and we had 6. We're looking at 11 sector slice here in the red. Top performing sector is energy, followed by industrials and materials. And on the downside, we had communication services, we had staples, and we had consumer discretionary. Tech actually was the 4th weakest here at just minus 1.06%. If we look at volatility, this is another thing that is pretty interesting this week. Again, we saw red action across the board. Basically, indices were red. Volatility didn't shoot up in the other direction. It initially did this week, but then we saw the VIX essentially taper off and actually close less than where it closed last week in terms of at least the front month VIX, closing at 25.85. Again, these are still historically elevated levels, but the fact that the VIX isn't, intuitively jumping here and getting very fearful of, maybe this cascade of selling that could continue to occur is, I think, again, a net sort of constructive for the market. The fact that the VIX seems to be kind of stubbornly hanging out in these mid-20s. If we look at interest rates and credit, I think I changed, I think this is the new grid here, so I pulled in some different data sets and organized this data a little bit differently. We saw yields basically across the board rise, which means that bonds were down in aggregate. The investment grade bonds, LQD, was up slightly. High yield bonds, J&K, down slightly. So really, nothing really interesting to report on in terms of this slide. Dollar and commodities. So we included the dollar index here. This is certainly not a perfect measure. The UUP ETF that measures the dollar against a basket of currencies. It's basically heavily weighted to the euro. But regardless, the dollar index was down this week. Commodities, generally speaking, were up this week. We saw gold up, silver up, just marginally. Ag ETF, so this is DBA ETF, which was up 0.74%. Crude oil up 7.5%, natural gas down 1.74%. So if we look at the report card this week, we actually have an overwhelmingly positive grade here for the market. Again, I think this is interesting when days like this or weeks like this happen, where you basically have 3 out of the 4 indices down. Things look bleak. Looks like the market's in trouble. But under the hood, if you're looking at some of these other factors in the market that are important, we do see some encouraging aspects from namely market breadth and risk sectors outperforming and volatility. Market breadth and risk sectors. So if we finish off here with some exposure from our trading strategy, Merlin, remember you can get 14-day free trials of this strategy. It had a pretty great week because of that biotech exposure. We've had a lot of biotech exposure for several weeks now, and this is nothing new. We've been kind of posting this, and that certainly helped this week. Our tech exposure, which is also pretty high, 40% of the portfolio is just straight up tech. That didn't do so well this week, but for the 50+% that was in healthcare, biotech, that's certainly helped offset and then some to the upside. So that's our position, still pretty aggressively leaned into this market, exposed to this market, and it is diversified here between, basically tech and biotech or healthcare with some other mix in there as well. So we'll be back in just a minute with some charts. Don't go anywhere. All right, we are back here with part 2. We've got TC 2000 open. We've got our equity market grid we're looking at right now. S&P top left, Nasdaq top right, Russell bottom left, ACWX, which is international minus the US, in the bottom right. We're looking at a weekly time frame on this chart. And the dotted colored circles here are the custom smart trend filters of ours. You get access to the smart trend filters, link in the top right. Or if you just want to learn more about how they work, they're price and volume based. They measure trend strength, trend direction. Price itself is the white dashed lines on all of these charts. So if we look here just at a high level weekly time frame, we've got green dots printed on all of these charts. We've got price above those green dots, which basically means that there's been no change here. We've had effectively buy signals on these markets now since May of this year. That continues to be the case on what we consider the longer term or the intermediate term time frame, looking out kind of 3 months plus, 4 months plus type of outlook. If we go down to a daily chart on all of these markets, this is where things have been changing. We've talked about them in our past few videos. If we look here in the top left of the S&P 500, you can see that we've been, we originally turned neutral here back in September the 3rd. And since that point, we've only been neutral to bearish in the S&P 500 since that time. So effectively, price is now below our trend filter. We immediately now have a bearish reading here in the S&P 500, which essentially says to us that in this time frame, looking out the next couple of weeks, we want to be cautious here. The benefit of the doubt is to the sellers right now on this time frame. If we look at the Nasdaq 100, we've got a more convincing sort of sell bearish scenario here. This went neutral again back on the 3rd of September, but then it went had a brief stint of a bearish reading here, went back to neutral, and then it went negative here again Monday of this week, and it stayed bearish and negative throughout the entire duration of this week. So we've got a clear sort of sell signal here, or caution, depending on how you want to view it, over the next couple of weeks here. And that essentially tells us that we need to see evidence come in on the S&P and the Nasdaq that the buyers can in fact stabilize this market. Now, if you take a look at the Russell 2000 in the bottom left here, you can see that this is neutral. It went into a sell signal on the 9th of September, and it lasted for about 4 days until this Tuesday, when the Russell 2000 sort of saw that continued move. Really, the big move to the upside was Monday, but the fact that it held in there Tuesday, held in there Wednesday, and then it kind of drifted a little bit lower here Thursday and Friday. But the fact that it's neutral again and trying to get back over this trend, whereas so you can see here price is below our trend filter, price is below our trend filter, the Russell is neutral and at it. So this has the potential to lead us higher or to repair quicker than any of these other markets right now. That's something we can pay attention to, something we've sort of been talking about in our past few videos as well. And in the bottom right, we've talked about ACWX being the relative strength outperformer here on a relative basis. You can see that's the case. In fact, it was bullish this week on Tuesday and Wednesday, and then it turned back down into neutral Thursday, Friday. So ACWX here on a relative basis looks the best out of everything. Now, if we take a look a little bit closer here at some of the price action, we're going to go to our S&P 500 chart. So our S&P 500 was down for the 3rd week in a row. So if I were to clean this up, basically here, you've got 3 weeks down in the S&P 500. This is the first time we've seen 3 weeks down since the March lows. So that's one thing of interest here. Same thing, I think, for the Nasdaq 100. It is down 3 weeks in a row, first time since bottoming out in earlier March of this year. But if we go back to the S&P 500 and we go down to a daily time frame, and we switch over to this board here, this is basically what we've been looking at. And last Friday, right? So if we zoom back last Friday, our analysis here, this was what the session looked like. Let's see if I can get it lined up. I think this was it. Yes, it was. So you can see here, let's see if I can just drag this a little bit. No. There it is. So, oh no, that's fine. We're going to go with this. I can't get my chart to do what I want right now, but that's okay. So this was last Friday. So we looked at this 3380 level, and basically it was closing right at this area here where we basically put our line in the sand, put our flagpole in here and said, look, if this market's going to try and hold up and not totally roll over and keep this to a contained sort of pullback, we want to see it hold around 33.35 or so. You could see intraday we undercut it, but then we bounced above it. We came into this week and bounced higher. We failed at resistance, and now we sort of rolled right back. And again, you saw buyers kind of drive this off of the lows again, and we closed around 33.20 here. So for me, this is starting to, convincingly violate this 33.30 area. I try and draw these lines with a crayon. I don't like to be precise with them just because I think it's foolish to expect the market to be so exact. So we are arguably still in this general area of support. And you could, if you want to just try and give this all the benefit of the doubt in the world, you could say we're just still trying to hang on here. And if we can get one more day, Monday, where this pops back up, then we're sort of saved. That's, not totally unreasonable, but you're certainly stretching here because it does look like this market's heavy. It looks like it wants to potentially kind of crack lower here. And we talked about the fact that if it does want to crack lower, Then an obvious sort of, again, being fairly general here. I'm not looking at exact levels, but I do like measured moves, and I'm a fan of them. I think the markets, most importantly, are pretty. They like to move in these measured moves sort of waves as well. And if we do see this corrective second leg lower here, we're going to get down to around 3,200, 3,130 or so, which was a big level back here in July, if you recall, of this year. So if we do see this continue to sell off and continue to fall lower, a reasonable sort of zone of follow through here is about 5% lower in the S&P 500. Again, not saying it has to happen, but with a sell signal on the trend filter, with a price breaking below 3330 area, it does seem like that is the path of least resistance at this time. Now, what could invalidate that? Invalidate that if we start to see a sharp reversal, a heavy kind of volume move back over and above this area, above this day's highs or so, getting back over 3350. Quickly, expansion in range, heavy volume, that would start to change the character, the tune of maybe negating this second leg lower. But until and if that happens, I think you have to be a little bit cautious here in the S&P 500. Overhead resistance is still 3,400 or so, give or take, and that seems to be, as we failed again here this week, is going to be the level to sort of take out on the upside going forward. Now, if we look at the Russell 2000, we've got a different picture here, because the Russell 2000, notice here, is not back to these lows. It's not breaking down and threatening to roll back over into the range. It's in actually the exact opposite scenario, where it's trying to break back above in a bullish formation here back into this old range over 153. This has basically been the line in the sand, the flag that we planted, saying that if the Russell can get closes over 153 and stay there, then it's looking like it has a good shot to sort of move back up into this range and see some rotation. It's definitely seen some rotation. It's definitely sort of helping the market kind of stabilize here. And we've seen that small cap as we looked at the performance grid at the top of this video. You can see some of those sectors there that are notoriously kind of under the small cap group are working, are getting some rotation, or at least aren't just selling off as aggressively as mega cap tech. So this is constructive. You want to see this continue here, getting back over, holding over 153, 154 is going to look good here for the Russell 2000. So let's pay attention to that. It is acting best as of right now. Nasdaq 100, if we look here at this chart and this view, we've been looking at this 265 to 268 zone. We're still basically dancing around the lows from last week as well. You can see again we're starting to close a little bit under here. We did sell off all the way down to 262 and change in today's intraday session before bouncing about 1% or so off of the lows. So that was encouraging. You can see it is trying to hold over 265 or so. Heavy volume continues to come in. So again, it's like the S&P 500. You can give this the benefit of the doubt and say it's still holding on here. And it arguably is holding on a little bit better in the Qs, but it is still heavy, and there is still heavy volume coming in. And the longer we kind of stay at these levels and test these mid 260s, the more sort of pessimistic, heavier likely chance that we see a second leg lower. So the Nasdaq 100, it's got to get back over, say, 272, get some volume, get some urgency, get some expansion in range back over 272, and then things could start to repair themselves, a bit better. But until and if that happens, I think you've got to be cautious here in the Qs as well. One other chart I wanted to bring up here, just to speak to breadth holding up again, if we look here at the S&P 500 again, it was down about 6.64%. If I look at the equal weight S&P 500, we'll use this one here. Notice the equal weight S&P 500 this week was up 73 basis points. So again, what you're basically seeing right now, and the real sort of takeaway here for the soundbite is just that, mega cap tech, mega cap growth is not a place you want to be right now. It still continues to struggle and it's dragging everything down with it. So that is all of your market cap weighted indices, the S&P, the Qs, they're in trouble right now. When you go down to the Russell, you're starting to see things aren't as bad in the near term. It's getting some rotation. The general average smaller cap stock is holding up. And, as long as that trend continues, I think you have your clear bounds of where you want to be and where you want to avoid. So hopefully that helps. Sort of navigate the market environment scenario. Let's get into some of the other markets here. If we look at volatility in the bottom left here, you can see VIX on the weekly charts in yellow sort of state right now. If we go down to a daily chart, you can see still kind of the same thing. It's checking back to its trend right now. But the fact is, and we'll look at the VIX a little bit later on a price perspective, the fact that the volatility index is not jumping off and screaming 30 plus and ripping higher and going out of the weekend here at highs is, I think, constructive, or at least, again, mildly constructive when you take it, from the backdrop of some of these other things that are occurring. If we look at gold and silver, those continue to be in strong uptrends short term. They are still consolidating. I'm going to talk about those in just a little bit. Oil is trying to get back over its trend this week. It was up 7% on the week, so that was encouraging to see. Same thing with commodities here, DBC, which is pretty oil heavy as well. And what I want to do now is actually look at some of these individual charts. So if I look here at the VIX, so the fact that, again, the VIX is it saw this sharp move over 35, got as high as about 35, and look how much it's given back already. It's already retraced about 30% of this big pop. It's still over 25. It didn't take out and go out at the very lows of the week, but the fact that the markets were selling off on Friday, it's a weekend, and the VIX didn't close at the highs of the session or the highs of the week, I think, again, is pretty constructive there. So that's a good undercurrent we have. If we look at some other markets like GLD, I think it's time to start really paying close attention to this. It's been consolidating here, and wouldn't be surprised to start to see this moving in the next week or two. It had this nice move higher here throughout July and August. It peaked at about 194 or so, and it's basically just been consolidating through time since that point. So I think gold is quite interesting. I've got some clear kind of ranges you can use, right around 185 or so, over 186, clearing some of these recent pivots here. That would be interesting on the upside. And of course, nothing says it has to go to the upside. It can start to break down. If it starts losing 180, if we see the US dollar, for instance, start really ripping to the upside or reversing trend and moving higher, then that's going to put pressure on commodities. So GLD could break down in the event that we see the dollar really start to firm here. So let's pay attention to that. We also have silver, which I think is equally as interesting. Again, big move in July here. It's consolidating. These are the times now, I think, to start paying attention for that shift into a momentum phase in gold and silver. So for all the reasons we just discussed in GLD, let's pay attention here as well. The other chart I wanted to bring up, or the multi-chart view, is of the big names, of FANG, although I don't think this is exactly FANG, but Apple, Amazon, Google, Facebook. Notice here with our trend filters on a daily chart, every single one of these companies right now are in a bear sort of sell signal. And these are, just the four of these together, I don't know what percentage they are, I forget off the top of my head, of the Qs in the S&P 500, but they are a large piece of what's going on in those indices. So as long as these are in sell signals here, then you're going to expect that the S&P, the Qs, those broad indices are going to have a really difficult time moving higher or, staying flat. So if you are, kind of continuing to see pressure here, if you think that we're going to continue to see a pullback continue here in these names, then you've got to expect and be positioned that the indices are going to continue to follow suit. If these start getting better, if they start going neutral, if they start seeing support, then that starts to change things. But I do think this is an interesting view here. It's the first time that most of these are really back in sell signals since the March lows, right? So if we zoom out in all these charts, they've basically been green and yellow, a couple of little small spurts of really just in Google and Facebook, where you had a couple of brief days of sell signals. But other than that, it's basically been smooth sailing to the upside, and we're now seeing, finally a little bit of a pullback there. Last but not least, I wanted to talk about biotech. So XBI and IBB. These are the two big relevant indices here that track biotechnology. You can see again, we saw a 6.7% week higher here in IBB, and we saw a 11.3% move in XBI. So the interesting point here is just the fact that both of these markets saw very strong reactions off of the March lows. They saw big uptrends in the beginning of the year, first half of the year, or I guess second quarter of the year, and then they just had gone silent here, pulling back and really consolidating. We're starting to jump to the upside here in both of these names. They look like, again, when we look something at like XBI here, we saw the heaviest volume we've seen since back here in July. We took out multiple weeks of prior highs. We cleared above lots of resistance here. In fact, we almost, there's only 1 week higher where we made a new weekly closing high than from where XBI stands now. So I like this sector. I think it's interesting, obviously talking my book here because I have lots of exposure in this sector, but I do think that this is potentially something that gets rotation and can persist for more than just this week. We're certainly overextended in the short term, so maybe a little fill back here into 110s or so makes some sense, but generally speaking here, I like the fact that this is starting to come alive again in a previously strong sort of area of the market, good volume coming in. So we do have lots of exposure. We own basically XBI. We own LABU outright. We did take some profits here in this trade. We got involved on Tuesday of the 8th. So perfectly timed trade there. Wish they were all like that, but this one worked out nicely. Sold half of it already, looking for this to continue, and basically still have a good amount of exposure in this area. So pay attention to biotech, pay attention to gold and silver, and also those mega cap names that are still in sell signals, trending down signals. Those are going to continue to see some pressure until that changes. So lots to think about this week. Lots of interesting things happening. Hopefully you had a good week out there trading. Thanks as always for tuning in and watching these videos. You can subscribe to our YouTube channel or follow us at The Trade Risk if you want to stay up to date. Have yourself a great weekend, and we'll see you back next week.